Good evening, everyone. Hope you all are doing well. So, today we are going to discuss question number 2 of March June 23, which is Slender Company. Yesterday, we were discussed the question number 1 in core company of the March June 23. So, this is day 2, question number 2. Okay, this question number 2, covers two parts. Part A about the matters to be considered in respect of quality of management means audit quality management, and the part B is about the cash flow projections. You have to evaluate the assumptions and the methodologies used by the management or the financial controller in preparation of the cash flow forecast. So question number 2 part A comes from the block 2 and the part B comes from the block 4. So you have to be skeptical and you have to be authentic while discussing these questions. Let's read these questions before wasting the further time. It is 1st July 2005. You are a manager in Globe and Company, a firm of chartered certified accountant which offers a range of assurance services. The managing director of Slender Company, which is not currently a client of Globe and Company, has contacted you with a request to undertake an independent review of a cash flow forecast for Slender Company. The following exhibits available on the left-hand side of the screen provide information relevant to the question. Meeting notes, notes from a meeting with Arn Slinder, cash flow forecast, a cash flow forecast, and supporting notes and assumptions to be used in support of a loan application. So it's clear that this cash flow forecast is used for the loan application. So from this line, we have to be skeptical that there is a possibility that cash flow forecast might be misappropriated or manipulated by the financial controller or the management so that they can secure a loan. This information should be used to answer the question's requirement. Answer the question's requirement within your chosen response action. First, read the requirements. 25 marks, 20 marks for your answer and 5 marks from the professional marks. Exhibit 1. Using Exhibit 1, Part A. Evaluate the matters in respect of quality management to be considered by Group and Company before accepting Slinder Company as a client of your firm. Remember Block 2. Accepting a new audit client matters to be considered. You have already performed the necessary client identification process, means you do not need to write about the client integrity these matters because you have already performed. It is now 1st August 2005 and Aaron has retired without withdrawing a lump sum and instead will continue to receive dividend as retirement income. Okay, I think this is for the part B. Let's first solve the part A. Evaluate the matters in respect of quality management. Let's read the exhibit. Okay. Okay, let's read meeting notes 1, exhibit number 1. So in the meeting notes, we have few paragraphs. Let's discuss one by one. First, we have company information about the business nature of the Slinder Company. Let's read. Slinder Company, a non-listed company, operates 20 coffee shops within large airport terminals. Of course, whenever you will visit for the domestic or international flights, you see that there are few kiosks or other shops for the coffee or for the other brand outlets. The company is owned and managed by Aaron Slinder and a financial controller. Okay. Typically, Aaron takes a small salary from the company and extracts most of his income from the business in the form of dividend. Most of the shareholders or directors use this technique for the tax saving purpose. As we all know, if you have studied ATX, that if you are going to take dividend, then the tax will be charged at 8.83 or 7.5%, something like that. Whereas if you are taking a salary, then the tax percentage will be 20% on the first slab rate, which is from 0 to 37700. Okay. Aaron is looking to retire and would like to extract 1 million from the company. The company operates from leased premises and the majority of the remaining assets are fixtures and fittings. As the inventory of food and beverages have a short shelf life and the company does not offer credit to customers. Now, brand name. Aaron has suggested he extracts funds of $1 million from the company by selling to the company the brand name of Slainder. Aaron sells the company brand name Slainder and extract funds of 1 million. This would give the company the right to trade under the Slender brand, which he believes has significant value. He has decided to sell the brand name for 1 million to the company despite an external valuation of 1 lakh. Due to the company's current cash position and existing borrowing, this would require the company to obtain further financing through a loan. As part of the finance application, there will be additional funding requested for expansion of the business. So if you read this paragraph, then you can identify the transactions of related party because most of the organizations and the shareholders use this technique. They transfer their funds or they transfer their business name to the company so that they can obtain a fund. This is a related party transaction. Business performance. The profitability of Cylinder Company has significantly reduced over the past 2 years as a result of decreased travel during a recent economic downturn, with the company making a loss in each of the previous 2 years. In the last 2 years, the company has struggled to make payments to suppliers on time. It means company is facing liquidity issues as it struggled to make payments to supplier on time and has suffered deteriorating relationships as a result. Means also they have a bad relationship with their suppliers due to late payments. In the last few months, payments to the creditors have been severely delayed, and as a result, Slinder Company's main supplier has implemented a cash on delivery policy for any purchases made by the company. Aaron is confident that revenue, profits, and cash flow will return to the positive results obtained in previous years. He has identified 5 sites for new coffee shops at smaller airports and is confident he can negotiate a good deal on leases for the site at lower than usual rents through his connections in the industry. Okay, in this paragraph, it's all about the business performance. Even though this Cylinder is facing very difficult situation, the economic downturn, liquidity issues as making delay payment to the suppliers and to the creditors, so which affect their relationship with them. Now, loan application. Slinder Company has obtained a funding offer of $1.5 million from a bank. This funding offer is subject to submission of a satisfactory business plan accompanied by an independent assurance report on the associated cash flows. He believes that if the proposal demonstrates the expansion of the business by the opening of new coffee shops in smaller airports, the bank does not need to know the brand in its own name. This is a wrong judgment by this lender. Of course, we will have to ensure or disclose all the information under which the company already trades. He would like for the process to be completed as soon as possible. Highlight this thing as it will affect the audit quality, as he wishes to be retired by 30th September 2005. Aaron expressed his frustration with his current auditors that they do not have the same confidence in the business as he does and intends to appoint Group and Company, our audit firm, as auditors of the company if the loan application is successful. There is a contingent condition, means they will appoint if the loan application is successful. In addition, the assurance team will be entitled to free food and beverages self-interest rate from any Slender company's coffee shops for life if that is the case. Okay, you have to be attentive while reading this question. There are so many things which we will solve now. Okay, this is cylinder March June 23 past paper. Question number 2, there are important points. Question number 2 cover 25 marks. 5 marks are professional, whereas the 20 marks for the answer. Part A matters in respect of quality from block 2, which you can watch on the YouTube playlist ACCA PassPoint. Part B for the cash flow forecast, block 4, also uploaded on the ACCA PassPoint YouTube playlist. Give headings to each paragraph for securing professional marks. Let's read about the professional marks. Professional marks are awarded for the evaluation, analysis, and professional skepticism, judgment, and commercial acumen in your answer. Okay. Okay, so in the evaluation and analysis skills, we have contextualize everything, investigate, evaluate, draw conclusions, and flag gaps. Professional skepticism and judgment, question, challenge, apply, spectrum. This is more relevant for the part B. So make sure you read all these professional skills and commercial acumen. Let's solve the question 2, part A. Matters to be considered. Group and company should consider the following matters with respect to quality management before accepting Slinder Company as an audit client. First is competence. Group and company, a firm of chartered certified accountants, offers a range of assurance services. Group and company should consider its competence in coffee shop operations as they have previously associated with any such nature of client. Overall competence might not be an issue for Gloom and Company in order to accept Slinder Company as its audit client because Globe and Company offers a range of assurance services. Now, honor management business. It's written in the business paragraph that Slinder Company is an owner and managed by Aaron Slinder and financial controller. We know that whenever there is an owner managed business, there are weak internal control. In an owner managed business, controls are not working effectively, which results in weakness in internal controls. Gloom and Company should obtain an understanding of the operating effectiveness of Cylinder Company's internal controls to ensure that the controls are working properly and there should be proper segregation of duties. Dividend income. Remember, Cylinder, sorry, Aaron passed the name of the brand Cylinder to the company and obtain a fund. Also, Aaron takes dividend rather than salary, less portion as a salary and high amount in as a dividend. Aaron takes a small salary from the company and extracts most of his income from the business in the form of dividends. There might be tax evasion by Aaron as he prefers to take dividends instead of salary. Further, there is a high risk of management bias as management can manipulate the financial figures for better dividends. So, Gloom and Company should skeptically deal with this matter before accepting the engagement. Also, Aaron is looking to retire and lie to extract $1 million from the Slinder Company, increasing the risk of management earnings. Sale of brand. Aaron has suggested he extracted funds of $1 million from the Cylinder Company by selling to the company the brand name Cylinder. This is a related party transaction between the owner Aaron and the Cylinder Company. This transaction is just to boost the company sales so that Aaron gets the desired return by internal sales. Further, this should be dealt with skeptically by Gloom and Company as there might have been several related party transactions in the past that the management of Cylinder Company might not disclose. Therefore, Gloom and Company should ensure that the related party relationship and transactions have been appropriately disclosed by the management. Now, Aaron has decided to sell the brand name for $1 million to the company despite an external valuation of 1 lakh. This is a significant transaction outside the normal course of business of Cylinder Company just to create a dummy transaction between Aaron and Cylinder Company. Gloom and Company should inspect the underlying agreement to evaluate the indication of the fraudulent financial reporting. Also, the transaction is not on an arm-length basis. Arm-length basis, not on a normal course of business, means specific or special conditions given to the investors or the related party. Arm length basis, the actual value is 1 lakh, whereas the value offered by Aaron is 1 million. This further increases the risk of management biasness. Point 5 is for the financing, and in the financing we now in the financing the current cash position and existing borrowing of Cylinder Company, the purchase of the brand name Slender from Aaron required to obtain further financing through a loan. Despite the fact that the liquidity position of Cylinder Company is worsened, but still Cylinder Company is still looking to purchase the brand name from Aaron is quite skeptical. Bloom and company should consider this matter before accepting the engagement and should discuss the liquidity issues with Slinder company to obtain an understanding of this matter. Furthermore, additional funding for the expansion of the business will be requested as part of the finance application. This further increases the risk of manipulation by management, as management window dress means they manipulate or present the best interest instead of true and fair. Window dress the financial statement to present the best view for obtaining the finance means they want to please the investor, the financial institution. Therefore, Gloom and Company should critically review the financial statement and any projections used by management to secure the funds. Okay, this is the way to draft your answer and link each and everything with the exhibits. If you compare my answer with the questions, you will see most of the keywords are from the question, which you just have to copy and paste, just explain in your own words. Make sure most of the linking with the exhibits. Now, business performance. The profitability of the Slinder company has significantly decreased over the past 2 years due to decreased travel during a recent economic downturn. The company made a loss in each of the previous 2 years and faced difficulty making payments to the supplier. If this condition continues, the Slinder company may not be able to continue as a going concern because the main supplier has implemented a cash on delivery policy for any purchases made by the Slinder company due to payment delays. Further, it will affect their relationship with the supplier. Aaron is confident that revenue, profits, and cash flows will return to the positive results obtained in previous years, increasing the risk of window dressing in the financial statement by hiding the material uncertainty paragraph so that Aaron can negotiate a good deal on leases for the sites. Of course, if the entity is facing a liquidity issues or there is a material uncertainty relating to going concern issue, so no one or not any investor or financial institutor will provide a finance or contract any deal. So this is skeptical because Cylinder company already faces liquidity issues and after this supplier cash on delivery condition, it is not possible for Cylinder company to perform any further. Ethical issues. Remember free food till the rest of their life if the application loan made successful. Also, the appointment of Bloom and Company based on the condition. The assurance team will be entitled to free food and beverages from any of Cylinder Company's coffee shops for life if the loan application is successful. This result is in a self-interest threat, familiarity threat, and an intimidation threat. Self-interest threat is created because of the financial interest of free food attached to the Slender company by the audit team, which can influence them. However, a familiarity threat is created because the audit team is sympathetically attracted towards the Slender company and its management due to such an offer. Furthermore, the intimidation threat is created because an audit team member is deterred from acting objectively because of undue influence by the management of Cylinder Company. Remember, it's mentioned in the last paragraph that we appoint Gloom and Company if the loan application made successful. Further, the frustration of Aaron to remove the current audit team and appointing Gloom and Company as an audit team should be dealt with skeptically as Cylinder Company obtained a funding offer of 1.5 million for 5 new shops and Aaron want to hide the brand name from the bank on which Slinder company trades. This shows that Aaron wants a new audit team so that they should be pressured to work under strict deadlines as Slinder wishes to complete the process as soon as possible. Also, there might be a possibility that Aaron is trying to conceal information from the new audit team, Bloom and Company, which is why Aaron is considering appointing Group and Company because new audit team does not have sufficient knowledge of the Cylinder Company, as it can result in negligence of Gloom and Company professional liability. So, in ethical issues, first we identify self-interest threat due to free meal and intimidation threat because of pressure as the audit team will not work according to its objective or scope. Also, the frustration of removing the previous auditor and appoint a new auditor is also an indication as it can increase the professional liability of Gloom and Company if any wrongdoing done by the Gloom and Company under the pressure. So this is for part A. Now you have to write conclusion. We know whenever the examiner write evaluate means conclusion. Based on the above mentioned matters considered by the group and company before accepting the engagement of Slinder company regarding quality management shows that group and company should not accept this engagement as it affects the quality of the engagement. How it affects the quality of the engagement? Now, several factors affect the quality of the engagement, such as management bias, related party transaction, ethical issues, and others. Therefore, Gloom and company should refrain from this engagement as it can also result in negligence of Gloom and company's professional liability. So this is it for part A. Now part B. Let's move to the question again. Okay. So for the part B, first we have to read the requirement for the part B. It is now 1st August 2005 and Aaron has retired without withdrawing a lump sum and state will continue to receive dividend as retirement income. Remember IAS 19 employment benefits. On the basis and having satisfied client acceptance procedure, Gloom and company have accepted the engagement. Now the engagement is accepted, means we move to the next stage. Accepted the engagement to review the cash flow forecast for the 5 lakh expansion funding. The finance controller has prepared a cash flow forecast. Who prepared the cash flow forecast? Finance controller, the one who obtained or who acquired Slinder and company with the Aaron Slinder. Prepared a cash flow forecast for submission to the bank. The cash flow forecast covers the 3 years to 30th June 2008, means from August 2005 to 30th June 2008. The finance controller is an experienced qualified accounting and his forecasting in prior years has been very accurate. So this line ensures that financial controller has experience, means competence using the information in exhibit 1 and 2. Now this is difficult. You have to use the information from both the exhibits. We just covered exhibit 1 in which we identify few transactions between the Aaron Cylinder and the company in which Aaron transfer their brand name. Also there is a transaction of the lease as Aaron Cylinder wants to obtain 5 shops only. So these are the things which we have to use in this part B. Evaluate the assumptions used by the management and the completeness. Evaluate the assumptions used by management. First, you have to evaluate the assumptions used by management. Then, the completeness of the cash flow forecast prepared means cash flow forecast prepared by finance controller use all the relevant information. If there is anything omitted or not recorded or not mentioned, then you have to comment on that as well, comma, explaining why particular assumptions should be challenged and approached with professional skepticism. Let's go through the cash flow forecast. This will be in the Excel form. Of course, we all know cash flow forecast will always be in the mathematical form. Okay, now we can read. Okay. So cash flow forecast for the 3 years to 30th June 2000 x 6 month period to first 31st December 2005 to 30th June 2006. 6 month, then 6 month, then 6 month, 6 month, 6 month. But if you compare 2005 to 2006 1 year, 2006 to 2007 second year. Okay, let's go through one by one. Sales per coffee shop. There is a note number one. Sales per coffee shop. If you can see the sales per coffee shop amount in 31st December 2005, it's 125. In the June, it's also 125. And in the December 2006, it's 140. In the June 2007, it's 140, means consistent. In the December 2007, it's 160. After every 6 months of the next year, there is a slight increase. Okay, let's check the number of coffee shops. First 20, then 22, 25, and remain 25. Okay, let's go through the note number one. Sales have been calculated based on the average sales per coffee shop in 2003. Okay. Prior to the economic downturn, sales price inflation has been included at approximately 10% per annum. Now solve for the sales part. Let's move to the answer sheet. Sales. The assumptions used in the sales per coffee shop is not appropriate, or you can write is not optimistic. Why? Because the sales price increased by inflation impact of 10% is not aligned with the 2006 sales price, as it is taken at a 12% increase instead of a 10% inflation rate. So it means there are other impact as well, which the financial controller is not mentioned in this forecast note. So you have to comment on that. How you will calculate this 12%? I have told so many times, compare this year figure with the last year, then divided by the last year figure gives you the percentage increase or change. Also, the sales calculated based on projected average sales per coffee in 2003 prior to the economic downturn are not optimistic, because no such data has been provided by the financial controller. So how we can rely that in the 2003 the values are accurate or not? Also, the number of coffee shops take the inflation impact of 10% approximately appropriated till December 2006. However, from June 2007, it is above 10% and is consistent till June 2008, which is not appropriate, as it should be increased gradually over the year. Furthermore, the financial controller takes the inflation impact twice on sales per coffee shop and on the coffee shops, which is not justifiable. You just have to calculate or take the impact either on the unit or on the unit price, not on the both. It should be taken correctly on the sales per coffee shop instead of number of coffee shops, as inflation has adversely affected the price, not the quantity. So you have to write these things. Okay, this is very important questions. Once we solve further past paper questions, we should go through more questions on these cash flow forecast. Now move to the question again. Let's check the payment to supplier note number 2, 750, 750, 750, 924, 1050, and 1200. In the first 3 6 months it's consistent, then there is a slight difference, 924, then 1050, then 1200. Let's read the note on this. The inventory purchases have been calculated based on historical gross margins of 70%. Historical gross margins of 70% means past trend. Historical means past trend. Hypothetical assumptions. Okay. Margins of 70% and suppliers are paid in arrears. Even though it's mentioned in the exhibit 1 that suppliers are making payment delayed. That's why there is a conflict with the supplier. Let's solve this one as well. Payment to supplier. The underlying assumption used by the financial controller in payments to supplier is not optimistic. The underlying assumption used by the financial controller in payments to supplier is not optimistic, as the supplier facing delays in payment from the Slainder company. And due to this, supplier implemented a cash on delivery policy on any purchase made by the Slainder company. Therefore, it seems inappropriate that the supplier agrees to take payment in arrears. Look how you will fetch the professional skepticism judgment mark, because you are questioning the or you are challenging the assumptions of the financial controller. If you read the note 2, it's mentioned that the payment made to suppliers in arrears, but we know in the exhibit 1 it's mentioned that suppliers agreed a cash on delivery policy. Also, as the sales price has been increased by 10% of the inflation rate as per the financial controller forecast, it is not appropriate in terms of the payment to suppliers, as payment on December 31st is 0.75 million, which is calculated based on the last 6 months sales figure, but still consistent with the June 2006. How I calculate this figure? It's mentioned that the 70% gross margin. Let me recall you again. Gross margin. Gross margin means sales price, 70% of the sales price. Okay. So, but consistent with the June 2006 and December 2006 payment. Even though other forecasts of payment to supplier are aligned with the 70% historical gross margin, where the assumptions are correct, we have to write that this is correct, which I have written in this case. Even though other forecasts of payment to supplier are aligned with the 70% of historical gross margin. Therefore, the December 2005 payment to supplier figure should be estimated accurately, as it seems judgmental and manipulative. As the Slinder company faces liquidity issues, it might not be possible for them to pay cash on delivery. Now, lease payments. The lease payments used in the cash flow forecast by the financial controller are not optimistic because aren't confidently. First, read the lease case from here. Okay. Now, is there any part for these? Yeah, there is a note. Lease payment 1025, 1025, 1075, 1185, 1185, 1185. In the last three semi-annually period, the payments are same. Let's read the note on this. The company leases 20 coffee shops as at 1st July 2000x5. Let's see, it's mentioned about the 5 shops or the 20 shops. Is there any information about the lease? Yeah, if you can see, he has identified 5 sites for new coffee shops at a smaller point and is confident he can negotiate on good deal on leases for the sites at lower than usual land interest. So is nothing is mentioned about the 20 shops. Okay, let's solve. The lease payment used in the cash flow forecast by the financial controller are not optimistic because Aaron confidently started that he negotiates a lease on favor renters through his links in the market. Further, the increase in lease payments Further, the increase in lease payments is not justifiable by the interest rates, as no interest rate is mentioned by the financial controller. Therefore, Gloom and Company should obtain a proper lease agreement with whom Aaron is in negotiations, so that the terms of the lease shall be notified or identified. Now we are left with other costs. Other cost means other than those which do not have any notes. Marketing cost, and these are the other costs. Operating costs which not mentioned in this forecast. Let's check. There is no such information provided regarding the other cost in the forecast used by the financial controller. However, the other cost increased by 10% second year as compared to the first year, which further increases by more than 10% even from the second 6 months of June of 2007, which is also not justified by the financial controller. G and C should ask the financial controller the reason for not providing any assumptions for the operating cost, and it seems that the financial controller wants to conceal expenses. Now we have capital expenditure, the other cost related to this forecast. Okay, now capital expenditure, there is a note. Capital expenditure has been forecast on the basis of 1 lakh setup cost for each new location. Two new coffee shops will be opened in the 6 months to 31st December 2006, and three new coffee shops will be opened in the 6 months to June 2007. Let's read. The capital expenditure of 5 lakh forecast by the financial controller is not an optimistic, as the Slainder company might not be able to secure the funds. Also, there might be some revenue expenditures that financial controller does not incorporate in the cash flow forecast, as all the capital expenditures have been taken in the cash flow forecast. So this is how you have to draft your answer. This is very, very, very important topic and question. Today we solved two questions. It's question number two, but there are two parts, and both the parts come from the separate block. The first part A from the block 2, this part B from the block 4. So it's very important to cover the entire course of AAA. Please, please, please don't go for the selective study. Please consider, before doing the selective study, please consider this thing that you have spend so much money into this study, so there is no point just to skip any chapter or any topic. Please, these are very efficient resources for your triple exam. My best wishes are and prayers are with you. So take care and goodbye. If you have any questions or any queries, please you guys can reach to me personally or just comment down. I will try to resolve your queries. Take care.